I'm Niles Mativ, and this is Money and Markets TV. One of my favorite sectors for income right now is healthcare. And within that industry, I'm especially bullish on the major pharmaceutical firms. Right now, a lot of investors are asking themselves whether drug stocks are a prescription for higher income or a recipe for disaster. But I think the answer is clear. Despite the challenges, many big pharma stocks are great values right now, especially if you're the kind of person who likes big fat dividend payments. But before I get into the positives, let's talk about some of the problems these companies face. Patent expirations are clearly the biggest hurdle right now. For at least a few years, the world's major pharmaceutical companies have been dreading the day when their blockbuster drugs lose patent protection. And this is a major reason that the group has been struggling to gain investor favor. This year, Pfizer will lose 3 patents worth annual sales of at least $13 billion. Lilly and Novartis will each say goodbye to single patents worth $5 billion a year. And other companies are in similar boats. Obviously, these companies aren't sitting around twiddling their thumbs. Researchers are working frantically to discover new compounds and get them through clinical trials. But there have been setbacks there too. All told, the Food and Drug Administration issued about 20% fewer approvals last year than they did in 2008 or 2009. In addition to those headwinds, there's also massive uncertainty surrounding government actions related to the healthcare sector. Here in the US, President Obama's reform measures threaten to crimp profits from prescription drug sales. Meanwhile, Europe's fiscal woes are causing countries to revisit their own healthcare budgets. It's clear, however, from the current prices of drug stocks that investors have already priced in these concerns. The Dow Jones US Pharmaceuticals Index hasn't enjoyed much of a bounce since the market's major low in March of 2009, and is still far off its former high reached more than a decade ago. The problems I outlined above are already well known and help explain why big pharma stocks have missed out on most of the market's big rally. But I would argue that the skeptics have swung the pendulum too far. I'm confident that the industry is going to solve its problems, and in fact, there are plenty of reasons to be positive on the group going forward, especially at current valuations. Those big patent expirations, particularly while troubling, many of them won't really hit results until 2012, giving companies at least another year to work on new products. Meanwhile, recent acquisitions, especially in biotechnology, should help these firms develop new blockbuster candidates. For example, Pfizer gobbled up Wyeth in October 2009, and it's now in the process of completing its acquisition of King Pharmaceuticals. Heck, even if no quick replacements come, Big Pharma still boasts plenty of small products that add up to billions in annual revenues. And about all that government interference, certainly the winds are blowing less favorably for the industry right now. However, in the US at least, the Republicans have made it very clear they intend to undo Obama's healthcare plan. In addition, losses in Europe could easily be offset by newfound opportunities in emerging markets. While global pharmaceutical sales are expanding about 5% a year, demand for drugs in emerging markets is rising at triple that rate. And in places like China, it's growing even faster. So put me in the camp that believes now is the time to scoop up some big pharma stocks, before mainstream investors come flocking back to the group, or the big challenges are solved. I'm already recommending 2 of these companies from my own father's income portfolio, and I suggest you consider the strongest names for yourself too. Of course, if you don't like holding individual shares, you can also get a broad stake in these companies through a pharma-focused ETF, like the Spider S&P Pharmaceuticals ETF, ticker symbol XPH. I'm Niles Mativ for Money and Markets TV. Thanks for watching.